Hello and welcome to Fund Money, your 24 into 7 buddy for all your money matters. In this video, we're going to discuss some of the things that you need to keep in mind when your income tax filing has overshot the deadline. That is, you missed the income tax filing deadline. So, what are the important things that you need to know? That's coming up in just a little while. Welcome back. Welcome to Fund Money, your 24 into 7 buddy for all your money matters. Now, in this video, as I mentioned a little while earlier, we're going to discuss some of the important things you will need to keep in mind if you missed the income tax filing deadline, right? So, number one, you will now be filing your return under section 139(4). Okay, now this is when you're filing online. You have to go to that drop down and keep that in mind. Next, of course, you have to pay a late fee. There is a little bit of a penalty for paying your rather submitting your income tax return late. So what's that? What do you have to pay? So till December 31st you pay rupees 5,000, and if your income is less than 5 lakhs, then you pay 1,000 rupees. Between December 31st and March 31st, you pay rupees 10,000. So more you delay, more you pay, right? Now, next is that you have to pay penal interest rate if there is tax outstanding. If you have tax that you need to pay, you have to pay interest. And how is the interest calculated? It is basically the time the tax has become due till the date you are going to pay the tax, right? And this interest is on a monthly basis, so it's reasonably steep for people if the outstanding tax is quite a bit. Now, remember one thing: just in case in the income, in case where income tax authorities assess or arrive at a tax liability figure which is higher than what you have calculated, you have to pay interest on that amount as well, right? Now, there's something else that you don't get. You basically can carry forward your capital losses. So we talk about making capital gains when you sell off an asset, share, bond, real estate, and what have you. Now, when you are basically filing your returns after the deadline, you don't get to carry forward your losses. So what that happens is, if you may have made a capital loss, you can actually offset capital gains in the future. So that helps you cushion the impact of tax. So if you're lost out on capital gains on one particular assessment year, or a tax assessment year, or a financial year, then you can make sure that in the future, if you're making gains, you really don't have to pay tax on that gains. So that benefit you lose out. The other thing is revised returns. You can file if you filing it on time from the date you file your income tax return. Within 120 days, you can file a revised return, provided you have file your returns on time, that is before the deadline. Now, once you do it late, that benefit or that window is not there. So these are 3 or 4 major things that you need to keep in mind while filing your income tax return. One needs to file it on time, and just in case one hasn't been able to do so, nobody does a delay on purpose, I'm presuming. But if the delay has happened, you will need to keep these things in mind. So if there are some other things you think other people on this channel should be knowing about delayed income tax returns, please put them in the comment section. Hope you have liked our video. If you liked it, why don't you put in the thumbs up, hit the thumbs up button. And apart from that, you can subscribe to the channel for real-time uploads. Remember, there are more than 500 videos on this channel on various aspects of personal finance, so we keep adding videos very regularly. So there are lots of playlists that you can check out. You can also connect with us on our website, that's www.fundomoney.com, and apart from that, we are there on all leading social media networks. So till the next edition of Fund Money videos, take very good care of yourself, and goodbye.